please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
But Ashwani Gujral, Sudarshan Sukhani and Rajat Bose with us now. Gentlemen, good morning. Ashwani, thoughts on market first? Over the last 3 days, we had a decent rally. Now at 10,750 on the Nifty. How would your approach be on this trading day today?
Good morning. I think 2 or 3 good days. Today we could be sideways, so I'm not really keen on the index, but basically still remains buy on dip. So any sort of 20-25 point dip on the Nifty or the Bank Nifty should allow you to buy, but overall the opportunities will be mediocre. So individual stocks, I think today some of the auto numbers look good. So maybe Tata Motors day has come. So that's where short covering could happen fairly strongly.
Okay. Good morning, Ashwani. Would it be ditto for the Nifty Bank?
See, very similar. Again, 2 odd days of big rallies. So if you buy today, your stop loss is fairly wide. So, any sort of 100-150 point move will make it basically safer. But if you do want to take a trade anyway, the mood remains good, and overall it's still a buy on dip market.
Okay, it's still a buy on dip market. Sudarshan Sukhani and Rajat Bose are also with us. Gentlemen, morning to both of you. Sudarshan, we have many positives going for us. I mean, good auto sales, good GST numbers, decent numbers from HCL Tech. How would you trade today?
Yeah, good morning. Sonia, I won't look at the positives because the markets sometimes accepts them, sometimes ignores them, the news. But the charts are certainly positive. We had a trading range for 8 days. We broke out decisively from that range. And since that breakout, we should be on the long side of the market. So today also, if you are not long, today's early morning dip, if what the SGX suggests is correct, that early morning dip is a buying opportunity. Your stops are 10,650 in the cash index. And that means that stops have been raised, and with this stop, just stay on the long side of the market.
Okay, and what about the Nifty Bank, Sudarshan? I mean, I asked Ashwani as well that question. I'm asking because the bond markets are trading after 4 days and they have a bit of positives going for them. There was that foreign fund announcement, easing of rules. There is the GST numbers, which at least are not negative, reasonably positive. So, will the Nifty Bank have anything positive going for it?
The Nifty Bank had a very narrow range day on Monday. That tells us it's poised for a big move. Since the momentum is on the upside, I think this big move should also come on the upside. So the Nifty Bank is a better trading opportunity. We just want it to cross 25,600 and it should do so. Once it crosses that level, we should be long in the Nifty Bank aggressively.
Oh yes, in fact, Ashwani, that was my follow through as well. Between banks versus IT index has been phenomenal so far. You think that big trade is still on, IT versus banks?
See, IT has just had the first rally where a very negative perception has probably become neutral or slightly positive. I think it will consolidate. The last 15 odd days, the rally has been vertical. So you don't want to get into IT now. Maybe a correction will give that opportunity, 200-250 points, and they'll be ready for a fresh buying. I don't think I'm very positive on banks. The money is clearly moving into IT. So look for reactions there to get long.
Okay, so that's 2 different views. With that, let's invite Rajat Bose into the conversation. Rajat, your Nifty trade today?
I'll be going long. I'll be going long in the Nifty May futures, and my stop loss will be below 10,738 and target will be 10,863. Once 10,863 is decisively crossed, maybe then 11,000 on the Nifty futures would be on the cards. And still it is a buy on dips. I agree with my other colleagues that it is a buy on dips market for Nifty. That's it. And regarding the Bank Nifty, I would say that it needs to take out 25,650 decisively. Once it does that, then we can expect further higher levels. Otherwise, there are a lot of good supports right from 25,350 to about 25,150. Unless it breaks this support zone, Bank Nifty would also be bought on dips.
Okay, Bank Nifty could also be bought on dips. Ashwani, you spoke about Tata Motors. What about Maruti and rest of your picks?
See, all of these auto stocks, on Monday, I think fell a lot. Maruti fell, I think, on the day of the results also. So that's where I'm trying to target, because today these individual plays are likely to do a bit better than these stocks. Tata Motors, it's just had some sort of a double bottom. So maybe a rally back to 395, 400 shouldn't be out of ordinary. Similarly, iShares, Maruti, these three stocks, I think there should be good trading opportunities there.
But what else are you looking at? You have a list full of
Finance
banks.
companies as well.
Sorry?
Finance companies.
Yeah, banks, fine. That's what I was thinking. Yeah, go ahed, Ashwani.
Because I saw the auto numbers this morning. So NCC is a buy with a stop of 130, target of 142. Hind Unilever is a buy with a stop of 1485, target of 1540. Repco Home is coming out of massive bear market. That's a buy with a stop of 638, target of 660. Escorts is a buy with a stop of 980, target of 1045. And I think Yes Bank has bottomed out. I've been saying that since 300. That's poised to move further, 385, 390.
Okay. Well, Escorts looks like a common factor. Sudarshan, fire away, please.
Yes, that's right. Escorts is making lifetime new highs. You really want to buy lifetime new highs in a bull market or in an uptrend. So Escorts is a buy. So is Divi's Lab. Divi's Lab is part of the pharma sector, which I have spoken about many times. The entire pharma or most of pharma, good quality pharma stocks are giving us bullish patterns and going higher. You have Sun Pharma, Wockhardt. So you could just take any of them. But for today, Divi's Lab seems to be better poised for a big move almost immediately. That's a buying opportunity. So is Century Textile. That stock is now consolidating after a decent correction and suggests that a new rally is coming. I also have two intraday short sells. One is Coal India. The stock has faced significant resistance, is probably looking for a slide. And the second is PNB, where I think PSU banks could be sort of a little laid back, even if the bank nifty goes up.
Okay. And Rajat, what about you? What would you buy or sell this morning?
I have four stock calls. One of them is a sell and three others are a buy, and mostly populated with pharma stocks. Sun Pharma, I expect this stock to make actually a very good move. There are certain chart pattern that suggests that it is headed for 550 kind of levels. My target is 548 and I would put a stop loss below 522. It is a positional call. And Cadila Health, that also looks pretty good. The chart suggests that there is a bottoming out formation is happening. Target is 427 and I would put a stop loss below 407. Again a positional long call. Dabar is a sell because Dabar is not maintaining at higher levels and it is coming down. This kind of end of day chart pattern suggests that Dabar would at least fall for the day. Target would be 363 and stop loss would be above 372. And finally Siemens is a buy. Siemens did pretty well in the recent past and target would be 1159. Another big move likely in Siemens, and I would put a stop loss below 1100 on closing price basis.
All right, gentlemen, thank you very much for all those suggestions. We have to take a quick break. We are coming back and, of course, concentrate on the big corporate story of yesterday. L&T selling most of its electrical and automation business to Schneider. Welcome back to the big story. Larsen Toubro sells most of its electric and automation business to Schneider Electric for 14,000 crore rupees. Our colleague Disha Podar caught up with S.N. Subramaniam, Managing Director and CEO, began by asking him how the proceeds from the sale of that business will be utilized. Listen.
As you are aware, L&T electrical automation business is one of the oldest businesses of Larsen Toubro. It's been with us for the last 6 decades. It's a well-known brand of L&T. It's one brand which is available across the length and breadth of India, to a certain extent in Far East and certain extent in Middle East too. The transaction took some time because it was an international transaction. All the parties who had shown interest were multinational companies. They had their own procedures to go through. We had our own internal process and procedures to go through. Share purchase and business transaction agreement. And the process has to go through the necessary normal regulatory approvals, including Competitive Commission of India's approvals. So that's a process that will take time. So till such time, both the businesses will be run as, we'll run it as L&T AIC, and Schneider will run their own business in India. And as and when we get the regulatory approvals, we will have the real transaction in place. 14,000 crores is something which we have thought about. We have various options on it. I don't think this is the appropriate time to discuss that. There's still some time to get the money into the company, and as and when we get it, you will definitely get to know as to how we go about dealing with that money.
So the electrical and automation business that you're set to sell had the revenues of 5,038 crore rupees in FY17. Now you're letting go of a large chunk of your revenues as well. Why the strategic move?
As you have seen, L&T, and as time and again we have come to the press and otherwise mentioned about it, we are moving into a plane which is more infrastructure construction, EPC projects, manufacturing, heavy engineering products, defense and services. Now that's going to be the thrust area and focus as we see it. Any business which is not into that so-called core area as we define it, either we have to have huge amount of effort and mind into to manage that business, or we got to see where that business has been in L&T for a long time. We can house it in a proper, secure manner as we deem it right. Now, electrical automation business, as I just mentioned, is a 5,000 crore business. It's about 4.5% of L&T's sales. This business requires a fair amount of spend on research, development, getting into new products, tooling and such. Now, a company like Schneider, which is a $30 billion company, even if it spends 1% on R&D, you're talking about $300 million. At 5,000 crores, even if we spend 1%, you're talking about 50 crores. We cannot take the game on. We have been holding on in India, had a dominant market share in India, but how long can we do it? If that is the case, then we have to take money from other parts of the company and put it, which is not fair to the other business, as they require money for their own capex, R&Ds and growth, etc. And those are the thrust areas as we see it. This business is some way a consumer product business and does not fit into the industrial culture of L&T, though it's an industrial product. So having said that, I think it was a prudent on part of the chairman, Mr. Naik, and all of us to have thought through this and to have taken this decision. And we have taken it to its logical conclusion. And we believe it is the right thing to do.
Right. In terms of valuation, how has the valuation dynamic been arrived at? Because you had 5,000 crores of revenue and you've got almost like 14,000 crore rupees.
As I said, this is not purely a EBITDA multiple, though in some sense, in this kind of products and businesses, the kind of multiples that you get. What you got to see is the spread of the business, the huge distribution network that we have, the huge channel partners we have, the huge spread of business that we have across the length and breadth of India, to a certain extent Middle East and Far East. The production centers that we have at different places to quickly cater to requirements. The kind of skill sets that we have, right. the reach that we have, the tooling centers that we have, the design centers that the electrical automation business possesses. All these are come out over a period of time, and for somebody to come and do it in India just overnight is not a possible situation.
Okay, that's L&T exiting its non-core business, the big deal that took place yesterday. But let's talk about how to approach stocks now. Prakash Diwan joins into our discussion. Hi Prakash, good morning. Auto sales, what did you like best and what would you buy?
You know, the headline
Not which
numbers.
Car would you buy? Which stock would you buy?
The headline numbers sounded very promising for most of the companies, and if you see, this is 1 month where everybody's clocked some phenomenal numbers, and the likes of Eicher and all continue to kind of gallop so strongly. But the stock that I would focus on, given these numbers, Sonia, is Tata Motors, and I'll tell you why. It's not something that excites people usually, but there are two things that I saw in these numbers when you dissect it slightly closely. We keep on talking about the base effect last year, post demonetization and all that, but they've actually exceeded the number that M&M has clocked in terms of, so M&M has got about 55,000 passenger vehicles, and Tata Motors is also exceeding that. So it's not just percentile basis that it's impressive, it's also. The second is the commercial side of the business for Tata Motors has started kicking in as much as it is for Ashok Leyland. So we have Ashok Leyland not being able to meet up with demand, and Tata Motors is filling in that gap very quickly. And the last thing is, we don't realize, but the Tiago, which was the entry-level car from the Tata Motors stable after the Indigo platform was taken away, has actually become the second best selling car after Alto in the entry level. Of course, the margin is still huge, but it's quite a beat, because that means what Maruti has vacated in terms of the entry level cars, Tata Motors is trying to fill in. They're not fighting on the premium segment, but they're very clearly getting into mass volume. So I think that's going to be very good, because the return ratios start improving. So if JLR doesn't really upset things, Tata Motors is definitely going to be on a roll.
Okay. We will come back to, of course, autos. We have to discuss Hero Motor with you. But before that, L&T, what did you make of the math? 14,000 crore valuation. It's a 5,000 crore sales business that's gone.
So I think it's a good business that's been put on the block. It's not something that they were, troubled with, or it was ailing. But my sense is, and given the management commentary around this transaction, Lata, this is very clearly a focus, a renewed focus on EPC, and within EPC, I think L&T is gearing up for taking on the high margin complex execution services. So they've a couple of years back they had this IDPL, the road laying business, which they kind of started easing themselves out of for the simple reason that they realized that if they were to compete with regular EPC players, it's not going to help them in the top line or the margin growth. The operating leverage is only going to be possible if they were to focus on the high-end complex businesses. And this is a very positive move. They have been talking about focusing on core business activity, and this is probably a right step in that direction. So I think the market will like this in the short term as well as in the long term.
Okay. Prakash, good morning. Now that we have HCL Tech's numbers as well, what's your pecking order for IT?
So, performance-wise, TCS, HCL Tech definitely make the great earnings. But from a investment perspective, I think there's a little bit of re-rating that Infosys could positively go with. So I would still believe it will outperform even TCS and HCL Tech from here on. I'm not saying the numbers were great, but the headroom for improvement is much more there. And anything that they do...
No improvement, no.
No, so that's what I'm saying. But there is a very clear visibility that they know exactly what they need to do in terms of improving, and they will do it. For TCS to continue improving from where it is, it gets to be a difficult, treadmill to be on. So the pace is already very high, and you can't keep on improving on that. But I think some of the smaller players will also make the grade. So I continue to be quite positive on, some of the very small players. So let's not, mix them with the big ones, but among the smaller ones, FSL has always been a favorite, and it's
talked about it in the past.
Continually, kind of making sure that the metrics improve. So I would still go with the mid-cap IT guys, not so much with the large ones.
Okay, I don't know if you got a chance to take a look at Concor's numbers, but the volume growth looked really good this time, 19%, and not just that, they've guided for about 12% volume growth next year. You think for someone who's maybe missed out on this stock, it's still worth a buy?
The problem with these stocks, Sonia, is, and we've seen this with Concor, with BEL, even BEML, the government intent at times becomes fairly difficult to anticipate. And whenever, they keep on announcing these, the news flow around these companies is what kind of makes them, very volatile. So there's no comfort here that, things will continuously look up and you will get rewarded for the patience. So you'd rather go into stocks where there's very clear earnings visibility for the next 2, 3, 4 quarters, rather than get stuck with this. And then this turns out to be a one-off or something, or there's a slowdown, then again you are stuck with it.
All right, Prakash, we have to take a break on this note. We are coming back. We should have the pre-opening rates. We will also have F&O strategies for you.